DVLT just filed another deal with Scilex, and this one is going to split the room. The headline says $50 million. The filing says not all cash, not all now, and not even fully closed yet. That is the whole reason this video matters. If you are bullish, you can look at the headline and say, finally, liquidity. If you are bearish, you can look at the same headline and say, why is the company selling Bitcoin again? And if you own shares like I do, this is where you have to be careful. My instinct is to want this to be bullish. I want the cash, the rollout, and the tokenization story to work. But I do not want to lie to myself just because I like the upside. So here is my honest read. The new DVLT Bitcoin deal is not a victory lap. It is also not automatic disaster. It is a cash quality test. And the market should not judge this by the $50 million headline. The market should judge it by 5 boxes. Definitive agreement, initial cash received, payment form, use of proceeds, revenue conversion. If those boxes open, the bull case gets stronger. If they stay vague, this is just another giant number in a story already full of giant numbers. Educational research only. I own DVLT shares, so assume I am biased. No buy, sell, hold, price target, or personalized financial advice. Before we even get into the details, here is the scoreboard. Definitive agreement, pending. Initial cash received, pending. Payment form, unknown. Use of proceeds, unknown. Revenue conversion, still unproven. That is why my starting view is yellow, not bullish green, and not panic red. Important, but still unproven. Here is what DVLT actually filed. On June 24, 2026, Datavault AI entered into a binding term sheet with Scilex. The term sheet covers a proposed sale of Bitcoin currently held by Datavault in a Biconomy digital wallet. The number is 837 Bitcoin. The headline purchase price is $50 million. That works out to roughly $59,700 per Bitcoin. But there are 2 words I want you to hear before anything else. Proposed transaction. The 8K says this is still subject to a definitive agreement, good faith negotiation, customary closing conditions, and other factors outside the company's control. So I would not say DVLT got $50 million. That is too loose. The accurate version is DVLT signed a term sheet for a proposed $50 million Bitcoin sale. That difference matters because in speculative stocks, the gap between a headline and cash in the bank is where shareholders usually get hurt. The first mistake I do not want to make is calling this revenue. This is not customer revenue, tokenization fees, edge network revenue, or proof that the core platform is scaling. This is an asset sale. DVLT has Bitcoin. DVLT is proposing to sell that Bitcoin to Scilex. That can still be useful. If a company needs liquidity to fund a rollout, avoid worse financing, or buy time until a larger deal closes, asset monetization can make sense, but it does not prove operating execution. And that is my first strong opinion on this filing. Do not grade this like revenue. Grade it like liquidity. Revenue tells me the business model is working. Liquidity tells me the company can keep moving. Those are not the same thing. Now let's do the math that matters. The Q1 filing showed 837 Bitcoin remaining at March 31st, 2026. Datavault reported a cost basis of about $73.1 million for that Bitcoin. It also reported a fair value of about $57.1 million at quarter end. This proposed sale price is $50 million. So compared with the original cost basis, this is not a win. It is roughly $23 million below cost. And compared with the last reported quarter-end fair value, it is still about $7 million lower. Now, to be fair, Bitcoin moves. If spot Bitcoin is near the proposed deal price when the deal is being negotiated, then the company may be choosing certainty over volatility. That is not irrational. But I would not spin this as management selling Bitcoin from a position of obvious strength. My read is more sober. DVLT is turning a volatile asset into potential liquidity. That may be necessary, it may even be smart. But selling below cost basis is not something I clap for automatically. I want to know what the liquidity actually buys. Here is the most important detail in the whole filing. The $50 million is not simply $50 million of cash tomorrow. Scilex agreed to make an initial payment of $30 million. The remaining $20 million would be paid in quarterly installments beginning in the fourth quarter of 2026 and ending on December 31st, 2028. So the payment timeline stretches more than 2 years. But even that is not the biggest issue. The bigger issue is what Scilex can use to pay. The filing says Scilex may pay in cash, Scilex common stock, publicly traded securities of Scilex subsidiaries, or a combination of those. And it says that choice is at Silex's discretion. That is the line I care about. Cash is clean. Public stock is not the same as cash. Subsidiary securities are not the same as cash. If DVLT receives $30 million of clean cash, this filing is much more helpful. If DVLT receives mostly stock or other securities that still have to be sold, priced, held, or marked to market, then the headline is less clean. That does not make it worthless, but it changes the quality of the liquidity. And to be fair to the bull case, there is a version where this is exactly what you want management to do. Maybe selling Bitcoin to Scilex is better than dumping more shares into the market. Maybe this is bridge capital while larger funding structures move toward closing. Maybe DVLT is avoiding worse financing by monetizing an asset it already holds. That is the strongest bullish argument. I do not dismiss it. I just need the filing trail to prove it. So my second strong opinion is this. The headline number is 50 million. The real number is the amount of usable cash DVLT can actually deploy. This is why shareholders are nervous. The Q1 2026 filing showed cash and cash equivalents of about $2.2 million at quarter end. It showed net cash used in operating activities of about $8.7 million for the quarter. It also showed nearly $30 million of proceeds from the ATM program. And the filing already showed Bitcoin activity with Scilex. During Q1, Datavault sold 217 Bitcoin to Scilex for aggregate proceeds of about $18.2 million. The company said those sales were executed to fund operations. Scilex was identified as a related party. That context matters because this new filing is not happening in a vacuum. This is not the first time Bitcoin, Scilex, and DVLT liquidity have shown up in the same paragraph. The Q1 filing says Scilex was a related party and significant shareholder, provided short-term advances for working capital and operating needs, and was repaid mostly through Bitcoin transfers. It also says Datavault acquired a patent from 3 inventors, including Dr. Henry G. and Stephen Ma, both described as related parties. It also says Stephen Ma serves as Chief Financial Officer of Scilex, Inc., a significant shareholder and related party of Datavault. So let me be precise. I cannot prove control from that. I am not saying I can, but I can prove concentration of related party activity. And concentration of related party activity is enough reason to demand cleaner disclosure. Now we have to talk about the obvious question. DVLT previously announced a binding term sheet with Scilex for a $120 million cash contribution tied to the Quantum Ready Edge network. That deal was supposed to help fund the 100-city GPU expansion. So if that larger cash contribution is coming, why sell the Bitcoin now? That is the question I want management to make simple. There could be a good answer. Maybe the $120 million structure takes time. Maybe the Bitcoin sale is bridge liquidity. Maybe this is part of a larger Scilex financing roadmap. But as a shareholder, I do not want to live on maybe. I want the cash path, how much comes in, what form does it come in, what obligations are attached, and what milestones does that money fund. Because right now, DVLT has a lot of big number headlines. $50 million of Bitcoin sale consideration. The May registered direct offering, $120 million of Scilex funding language, a $2 billion structured financing term sheet, tokenization contracts, infrastructure rollout language, revenue targets. But the proof is not how many large numbers exist. The proof is which numbers close, which numbers become cash, and which numbers become recognized revenue. There's one more detail investors cannot ignore. In May, Datavault announced a registered direct offering. The company said it entered into a definitive agreement to sell 109,910 shares at 55 cents per share. That was expected to produce about $60 million of gross proceeds. The stated use was deployment of the quantum-ready GPU Edge network, build-out and equipment, plus working capital and general corporate purposes. So viewers are right to ask, if DVLT raised roughly $60 million in May, announced a $120 million Scilex term sheet, and then announced a $50 million Bitcoin sale, what is the real cash need? That question does not weaken the video, it strengthens it, because the June structured financing release added another important clue. The $2 billion structured financing term sheet said Datavault had a binding obligation to make a $25 million non-refundable payment by wire transfer by June 4th, 2026. And the company said the source of funds would come from the sale of Bitcoin and receivables. That line matters because now the Bitcoin sale does not look random. It may be part of a larger cash puzzle Datavault already telegraphed. When I see this many financing pieces, I stop asking whether the story is big. I start asking whether the story is self-funding. So the question is no longer just why sell Bitcoin. The better question is, how many moving parts are needed before the operating business can fund itself? That is not FUD. That is the difference between a growth story and a financing story. So when people in the community are frustrated, I understand it. I do not agree with every emotional take. I am not going to say management is stupid. I am not going to say someone secretly controls everything unless the filings prove it. But I do think shareholders are asking the right basic question. Why does a company with so many large financing headlines still need this many moving liquidity pieces? That question is fair. And for me, the answer has to come from filings, not vibes. So here is my actual scorecard. I would not mark this green yet. I would not mark it red yet either. I would mark it yellow, important but unproven. The bullish interpretation is simple. DVLT may be converting a volatile Bitcoin position into liquidity at a moment when the company needs capital to fund bigger opportunities. If the initial payment is mostly cash, if the definitive agreement closes, if the $120 million Scilex structure also becomes real cash, and if management turns that into revenue, then this could look like a useful bridge. The bearish interpretation is also simple. DVLT may be selling Bitcoin below cost, receiving consideration that may not be clean cash, delaying part of the payment until 2028, and still relying on related party complexity while the operating business needs proof. Both readings are possible. That is why the next filing matters more than the headline. Here is what would make me more bullish. A definitive agreement gets filed. The initial $30 million payment is mostly clean cash. The use of proceeds is tied to actual node rollout, equipment, or a clear operating milestone. The $120 million Scilex contribution gets a real closing update, and DVLT shows revenue recognition, not just bigger contract language. Now, here's what would make me more worried. The payment is mostly stock or subsidiary securities. The definitive agreement does not show up. The $20 million tail becomes a vague promise through 2028. Related party complexity keeps increasing without cleaner disclosure. And the company keeps announcing financing structures faster than it converts revenue. That is the line. I can stay bullish on a risky story. I cannot stay blindly bullish on a story that refuses to simplify. So my final view is this. DVLT's $50 million Bitcoin deal is not automatically bullish. It is not automatically bearish. It is a liquidity event with a serious cash quality test inside it. If this becomes clean cash, closes quickly, and funds real execution, then I can see why bulls would treat it as a lifeline. But if the payment is mostly stock or securities, if the tail drags into 2028, if the use of proceeds is unclear, or if the operating business still does not convert into revenue, then the market is right to demand a discount. As a shareholder, I want the bullish version to be true. But I'm not going to call something bullish just because the headline is big. The stock does not need another giant number. It needs one clean proof chain. Cash received, cash deployed, revenue recognized, that is the line for me. And until those boxes are checked, this deal is not a celebration. It is the next DVLT proof gate. Subscribe if you want the daily DVLT proof box. What changed, what is proven, and what still needs evidence. Educational research only. I own DVLT shares, so assume I am biased. No buy, sell, hold, price target, or personalized financial advice.